Good morning. It's May 1st, 2024. May is here. Goodness gracious. All right, let's jump right into it. BTC, hard stop for everything on my iBid kicked in and I'm out. All right, so it is what it is. Where would I buy again? 55K and for sure in the 52.5 area. Those are the two near term buy position for my iBid equivalent. Other than that, nothing to do here, right? Follow the TA. We are not buying into the halving, the cycle, none of that. None of that matter, okay? It's all about the TA. If you don't understand the TA, technical analysis is the best tool to use, especially for Bitcoin, something that don't have fundamental. I don't know what to tell you. You can keep watching those YouTube channels that show you all kind of fancy halving cycles and all that nonsense, because it is nonsense. But when it comes down to it, people buy and sell things based on greed and fear. Next, tap. Okay, I like tap. It is into the buy zone. I start to talk about tap potentially here, right? I brought this chart up, I think last week when I said, oh, it touched the channel low. Perhaps that's a good spot to buy. And in many ways, I'm glad I didn't. I watch it because the key reason why I did not want to buy it was earning, right? Sure, I thought about buying it, I missed it, and then I didn't kick myself for missing it because I knew earning was coming yesterday. And I said, well, let's see what earning is going to be. And earning was good. Guidance was not bad. It was not great guidance, but they reaffirm the numbers. And sometimes that's what irked me with the way the market reacted to something. You know, it is what it is. Regardless, I start to buy at 59 smallly, and then 58 bigger, and then I bought as low as 57 something. I had something in the 57, and I like it. Okay, I like it. Now, what is this gray zone? It looked big, but it's not all that big. Okay, you're talking 55.5 to 57.5. I believe my last buy was 57.48 or something like that. No, so it's not a huge zone, but why do I draw that in? Okay, look, ref law. I bought a lot starting at 58.4 all the way down because of the 100 weekly moving average. As you can see, the last time it got there, it wicked up coincidentally on earning. Yes, on earning, that's what happened. Remember, this is weekly, so we can still have that kind of weekly bounce. Okay, but still, that was the reason. If for anyone that trying to understand my reasoning yesterday why I went in big, that's the reason. Okay, and now going back, let's go back even 10 years. Okay, as you can see, the key spot is this. I'm going to change this to the white line because that is the most important of all. Okay, make that white. I'm trying to be consistent to color something white when it's key. Okay, that was the key. Support, and then breaking, and then resistant, breaking out, check back, and then that we have. Okay, so let's go back to this. Yeah, I mean, it's in that area of support. Can it go lower? Excuse me. Yes, it can. I'm not worried about that. Okay, I'll add more. But for now, I like tap. I like bud. STC is the least of my favorite. Okay, but for now, that's why I like Tab. Starbucks. Disaster du jour last night, and I will probably spend most time today talking about the next two. Okay, so let's go to the, yeah. For those that need a recap, I had a 86 put that was assigned here, and I feel comfortable about that, right? Because I talk about the channel of the downtrend, and sure enough, it was assigned. I got out. Perhaps a little bit too early, which is fine. I don't care. I make money. Um, I didn't overstay my welcome, and I did not buy anymore. Okay, because once again, earning is coming up now. Let's recap last quarter real quickly. Remember this ugly, stupid candle? This was one of the dumbest thing that I saw last quarter when Starbucks shot up on earning when it was not a good earning. Um, I'm not a fan of a business strategy that, I'm not sure there's a right term to call it. I call it rob Paul to pay Peter, rob Peter to pay Paul. Basically, you rob your future for the current, for the short term, uh, whatever, short term demand or short term expectation, but you rob the future. If you really pay attention to Starbucks earning, and I do, even before my son worked there, I had always been uh, very detail oriented when it comes down to Starbucks because I frequent Starbucks and I trade the stock often. Starbucks sold a lot of gift cards, lots of it, and that's how you can rob Paul to pay Peter. Because let's say they sold millions, hundreds of millions, 10, whatever number that is, and people buy them for gift card, they give them to friends and family to use. Well, guess what? That's what happened. Okay, they make the numbers on top of heavy promotional month of December. Literally 5 days a week, you have buy one get one free. Free hot chocolate on Saturday and Sunday, triple point on Friday. You name it. Ongoing, continuous promotion. I talk about this endlessly in December. Now, going into this quarter, I did not see that. Sure, was there like weekly promotion? Yeah, but it's not daily. I talk to my son every week. I ask him every week, and I can tell you, the last couple of weeks, he told me definite slowdown in business. He see a lot less young people, a lot less. He was surprised. He doesn't, he's not like me as far as economics. So he's just like, yeah, there is a slowdown. Definitely a slowdown in younger people coming into Starbucks, less tips, all of that the last couple of weeks. So my hunch was Starbucks saw it. Starbucks is a very well run company. Okay. If they think that whatever slowdown is short term, things will bounce back next quarter. But whatever slowdown is significantly worse, where they can't see a short term anymore, they're not going to bother to rob Paul and Peter again because it's not going to help. It didn't help. It did not help. This helped short term cover up the sins of December quarter. This did not. Okay, so I think Starbucks says a lot about what they see. If you dive into the numbers of Starbucks, it was weakness across the world. You're talking 6% decline globally. They raised prices, and yet average sales was below per tickets. It's just ugly. The metrics of Starbucks was super ugly, super ugly. Okay, so yeah, all that raising prices, it gotta end. And you heard me talk about this so many times that I'm sure it's annoying. I'm sure it is super annoying to hear me beat this dead horse. Stop buying. Stop paying up. Okay? In past recession, people trade down. They trade down or they stop. This recession cycle is the one anomaly where people will complain. Oh, inflation's so bad. It's so expensive. But I will keep paying. It's insanity. COVID has rotted the brain of consumer. If you keep paying, they will keep raising. Get it? We have hit the breaking point. Last today, McDonald's. Yesterday, oof, I miss this dip, but I am not concerned about it. I think you get your chance. I think the chance of buying below 270 in the mid 260 will happen. So if you miss it like I did, don't worry. I think that the chance of buying at 265 is real. McDonald's also came out with earning, not bad, but they also talk a lot about the weak consumer breaking. When it's $10 or more to buy food at McDonald's, something is wrong. Okay? It's insane. Use the damn app. For those that have a phone and you have the apps, the McDonald's apps, yeah, it's a lot cheaper. It's daily promotion. Use it. Why are you paying $10 for a Big Mac meal when you can pay $6? So yeah, it's regardless. It is breaking. So for the first time, okay, this is the first time that I start to hear this, and this go back to a couple like 2 months ago when Target CEO talked about the the lower end of the consumer trend is troubling for him. So it is starting to show up compared to last year. Last year, you heard the thing that I hate the most about company falling units, but they were able to beat guidance, beat earning, beat revenue expectation because they're able to raise prices. And the drop in sales was less than the amount of people that was willing to pay up. Okay, so that's what happened. You have all these businesses able to beat earnings because they were able to have consumers more than willing to pay more for less. It's insane. Terrible consumer behavior that enable corporate America to raise prices and not laying off people. That's the other thing. Okay, so it's here, it's now. Tesla lay off a bunch of people. I think you're gonna see a pickup in layoff in the coming weeks. Yes, in the coming weeks. It's coming. Um, Not much I can say. It's a dour, fast video, but I think I finally see something that showed me that the consumer have hit the breaking point. Thank you for watching. Be careful out there, okay? This it's gonna be an ugly market. the Fed is going to say, who knows what Powell's going to say, okay? Blah, 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 blah. I can't even trust the data that has been spewing out for the past 6 months. Utter lies and nonsense. But not much I can do about that. What is not lies and nonsense is corporate earnings report. They're not baking the numbers like the Fed. Okay? There is no 60,000 new government job popping up at McDonald's.